Hey everyone, welcome back to the Finance Homefront. I'm Bev, and today we're diving into the fascinating world of cryptocurrency from a Wall Street perspective. Ever wondered how the big players view Bitcoin and its impact on the financial landscape? Well, you're in the right place. Before we get started, make sure to hit that like button, subscribe to our channel, and ring the notification bell so you never miss out on our valuable insights. Now, let's explore the Wall Street perspective on Bitcoin. Larry Fink, the present chairman and CEO of BlackRock, a leading American multinational investment management company that holds the position of being the world's largest money management firm, overseeing assets exceeding $10 trillion, provides our first perspective. During an interview on Fox Business News, the anchorwoman inquires about the success rates and timelines of BlackRock's ETFs, especially focusing on iShares and their approval success. Larry emphasizes, "We strive to act in the best interest of long-term investments, and our track record with regulators reflects that commitment. We closely collaborate with regulators, addressing all aspects of any filing. While I can't delve into the specifics of this filing, our chart demonstrates our proactive engagement. We work closely with regulators, seeking their input on issues and finding solutions. We aspire to continue our positive history of collaboration with the regulators, aiming for approval of the filing in due course. Regarding Bitcoin, we advocate for the digitization of products. ETFs marked a significant revolution in the mutual fund industry, and we believe in further tokenizing assets." He further expresses, "Initially, I had reservations because early crypto users often engaged in illicit activities. However, as crypto became more accessible, my perspective evolved. I see the role of crypto as digitizing gold, offering an alternative investment. Bitcoin, being an international asset not tied to any specific currency, serves as a hedge against inflation, geopolitical issues, and currency devaluation. While I can't delve into specifics, the recent crypto interest reflects a global demand. The current rally, in my view, reflects a flight to quality amid global challenges. Investors are seeking quality assets, whether in treasuries, gold, or crypto, and I believe crypto will play a significant role in this flight to quality." Stanley Druckenmiller, the American billionaire investor, philanthropist, and former hedge fund manager, expresses his evolving perspective. "I've become more open to the idea that Bitcoin can serve as an asset class with significant appeal as a store of value, particularly for millennials in the affluent West Coast demographic. Despite my larger holdings in gold, which has been a reliable investment for centuries, I acknowledge that the Bitcoin bet might outperform given its thinner, more liquid nature and higher beta. Bitcoin's 13-year existence has contributed to its growing stability and brand recognition." Bill Miller, an American investor, fund manager, and philanthropist, states, "I don't have a clear outlook for the next couple of months. In my opinion, many people have incurred losses in the crypto space due to speculative investments in areas they might not fully comprehend. A significant number of initial coin offerings from 2017 have become worthless. Currently, there are approximately 10,000 coins, and excluding Bitcoin, all including Ethereum, face competition. Out of these, around 4,500 could be viable, resembling venture investments. However, I lack the expertise to evaluate them, and their success will likely follow power laws, meaning most won't succeed, but a few will thrive. I feel more at ease with Bitcoin." Bill Miller further comments, "I haven't encountered a compelling argument against allocating 1% of your liquid net worth to Bitcoin, especially if you reside in countries with challenging economic situations, such as those colorfully named by Donald Trump: Venezuela, Argentina, Lebanon, Turkey, Nigeria, Iraq, Ukraine, and Russia. For instance, Russia lost 50% of its reserves when the US government imposed sanctions." Paul Tudor Jones, an American billionaire hedge fund manager, conservationist, and philanthropist, expresses, Bitcoin shares many characteristics with early investments in tech companies. I only realized this after appearing on your show and being inundated by numerous individuals discussing Bitcoin. I have a modest single-digit investment in Bitcoin, and while I'm not a staunch advocate, what surprised me is the substantial community of intelligent and sophisticated supporters behind Bitcoin. It's akin to investing in Apple with Steve Jobs or early in Google, a globally crowdsourced group dedicated to Bitcoin's success as a mainstream store of value and transactional currency. This unique aspect, coupled with its role as an inflation hedge, makes me even more optimistic about Bitcoin. Unlike traditional inflation hedges, Bitcoin has the added benefit of strong intellectual capital supporting its growth. In essence, I believe we're still in the early stages of Bitcoin. Chamath Palihapitiya, a Sri Lankan-born Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital, shares his perspective. Bitcoin and similar assets are akin to taking the red pill. We are venturing into unexplored territory. Personally, I have investments in Bitcoin across my hedge fund, and private account. This is significant because in the next 3 to 5 years, it serves as an immensely improved store of value. Essentially, it's gold 2.0. The value of gold, which hedges the global economy, is around $9 trillion, with an ounce priced at $1,300, of which only 1 to 150 is the actual production cost. The rest is attributed value that we, as individuals, have collectively agreed upon. Bitcoin allows me to do the same thing, but outside the jurisdiction of any government. It is being utilized globally in regions facing currency challenges, such as Russia, Iran, Iraq, Egypt, Venezuela, Argentina, anywhere there's a need to safeguard assets. Furthermore, it may evolve into a payment mechanism. In all these industries, we are talking about trillions of dollars potentially up for grabs. It's a matter of exploring, understanding the opportunity over a few months, and then getting involved. In all these interviews, Bitcoin has emerged as the preferred cryptocurrency, with a recent industry report by DeVere Group indicating that 82% of millionaires are opting for it. As a leading decentralized digital currency operating on a peer-to-peer network without a central authority, Bitcoin has garnered attention from investors due to various factors. Despite facing challenges, the market experienced a notable shift, with 8 out of 10 high-net-worth individuals consulting their financial advisors about integrating cryptocurrencies, particularly Bitcoin, into their portfolios over the past 12 months. While Bitcoin remains a highly speculative and volatile investment, its increasing acceptance in mainstream circles and growing institutional adoption have attracted investors looking for alternative opportunities. It is crucial for potential investors to thoroughly comprehend the associated risks and volatility before deciding to invest in Bitcoin. Bitcoin has become the favored choice for millionaires for several reasons. Its limited supply of 21 million coins, creating scarcity, attracts investors seeking alternatives to conventional investments. Despite its price fluctuations, Bitcoin's status as the world's most popular cryptocurrency suggests a relatively stable value in the long run. Interestingly, the volatility of Bitcoin is a key attraction for investors, presenting both potential for high returns and high risk. For substantial market players able to monitor and capitalize on value fluctuations, Bitcoin is seen as a promising investment. The decentralized nature of Bitcoin is appealing to investors looking to diversify away from traditional financial systems, often subject to government control. As privacy in the crypto market faces increasing regulatory challenges, Bitcoin's autonomy stands out. The growing interest from major financial institutions and corporations, such as JP Morgan, Fidelity, BlackRock, and New York Bank Mellon, lends credibility to Bitcoin and intensifies investor interest. Institutional adoption is evident, with El Salvador making Bitcoin legal tender and banks expanding cryptocurrency services to compete with innovative fintechs. As we wrap up our exploration into why Wall Street investors are increasingly turning to Bitcoin, tell us, what's your take on the growing interest in cryptocurrency among traditional investors? Drop your comments below, and don't forget to hit that like button if you found this video insightful. If you haven't already, subscribe to our channel for more updates on finance, investing, and the latest trends in the crypto space. Ring that notification bell so you never miss out on valuable insights. Thanks for joining us, and we look forward to seeing you in the next video.